Imagine the US government quietly stepping in, buying stakes in companies that most people think are years away from real profits. What if that move suddenly shone a spotlight on a hidden tech industry, one that could rewrite computing as we know it? In today's video, we'll dive into the surprising news that Donald Trump's administration may have just done a huge favor for quantum computing stocks, and more importantly, what that means for you as an investor and as someone building wealth abroad. Stay tuned, because this one could change the game. Welcome to the Wealth Wisdom. If you're new here, we break down the biggest stories in tech, finance, and innovation, and all major stock market news in a way that's fun, easy to follow, and worth your time. Before we dive in, please take a second to hit the like button, share this with your friends, and subscribe to the channel. Please help this video reach at least 500 likes. It really supports the channel and helps us keep bringing you the latest market insights. Thank you. Disclaimer: this video is for informational and educational purposes only. It is not financial advice, and I am not a financial advisor. Always do your own research before making investment decisions. Investing involves risk, including the loss of principal. Today, we're tackling this headline: did President Trump just do a huge favor for quantum computing stocks? We'll unpack the story, explore what it could mean for the sector, and then do a deep analysis of three companies: Ion Inc., Rigetti Computing Inc., and D-Wave Quantum Inc. By the end of this video, you'll understand not just the headline, but the real investment implications and what this could mean for your portfolio strategy. According to a report by the Wall Street Journal, the Trump administration is in talks to take stakes in several quantum computing companies. The names mentioned include Ion, Rigetti, and D-Wave. All three stocks jumped on the news, and related companies like Quantum Computing Inc. also surged. The administration is reportedly considering a minimum investment of $10 million in each company. Why does this matter? Historically, the U.S. federal government has shifted tactics when it comes to strategic technologies. For example, it previously bought nearly a 10% stake in Intel Corporation and a 15% stake in MP Materials Corp. to counter China's dominance in key technologies and materials. The logic is simple: build strategic strength, not just chase market profits. In this case, quantum computing is being flagged as the next frontier after artificial intelligence. Remember when Google said its quantum chip ran a verifiable algorithm that surpassed what classical supercomputers can do? That's just one piece of a much bigger picture. So the big question is, if government investment is showing up, is this a signal? A stamp of approval? Maybe, but it can also be misleading. Let's break down what this move really means for investors. The government likely views quantum computing as a strategic priority, similar to semiconductors and rare earth minerals. By stepping in, the administration may be trying to ensure the U.S. doesn't fall behind in a global technology race. For companies like Ion, Rigetti, and D-Wave, this kind of backing could provide credibility, momentum, and visibility. So what does this mean for investors? On the positive side, government interest brings attention. That often leads to more capital, more partnerships, and more long-term opportunity. But here's the caution. These quantum companies are still highly speculative. They trade at high valuations, often with limited revenue and no profits yet. A $10 million government stake may be symbolically important, but it might not dramatically change each company's long-term valuation. And government involvement does not guarantee commercial success. This news is a catalyst, not a guarantee. It opens doors, but the companies still have to walk through them. Now let's zoom in on the three companies. Individually, starting with Ionc. Ionc's recent financials show strong momentum. Revenue has been accelerating, and the company holds a significant cash cushion, giving it a long runway to continue development. However, losses remain substantial, and profitability is still a long-term goal. Ionc is not a get-rich-quick stock. It's a high-risk, high-potential investment that could make sense only as part of a diversified portfolio. Discipline and risk management are critical here. Next, Rigetti Computing. Rigetti's revenues remain very small compared to its operating expenses, and most of its reported profits come from non-cash accounting adjustments rather than core business performance. This makes Rigetti even more speculative than Ionc. The upside could be significant if a major breakthrough occurs, but the risks, including dilution and funding challenges, are also high. That said, Rigetti's work with the US Air Force and DARPA adds credibility and could open doors to future government contracts. Rigetti is essentially in survival mode. The technology is promising, but sustained funding or a major partnership is crucial. Now let's look at D-Wave. D-Wave's financials show strong year-over-year growth in certain quarters, but revenue is uneven and lumpy. Big deals can boost one quarter, followed by quieter periods the next. The company has a solid cash position, which provides breathing room. Still, losses remain large, and volatility is a constant factor. D-Wave represents the classic speculative tech story. Massive upside potential paired with significant risk. This investment only makes sense if you truly believe in the long-term transformative power of quantum computing. So what does all this mean for investors overall? Government interest provides validation, but not certainty. Quantum computing has officially moved from science fiction into national strategy. All three companies are high-risk investments. They burn cash, operate at losses, and depend on timelines that can stretch for years. Ionc and D-Wave appear to have stronger foundations, while Rigetti remains the most speculative. If government funding moves forward, it could boost confidence and accelerate development. But these companies are still far from profitability for most investors. Quantum computing stocks should represent a very small portion of a diversified portfolio. The moonshot side, not the core. Think of them like venture capital bets, asymmetric opportunities that might pay off in a decade, not a quarter. Quantum computing isn't just another tech trend. It's a global race for technological dominance. These companies are small today, but the underlying technology could reshape entire industries. Government support from the world's largest economy is meaningful, but patience is essential. Real disruption takes time. Know where each company is in its life cycle. Match risk to your goals. Prioritize stability, income, and diversification first. Quantum stocks can have a place, but only if you fully accept the risks. The bigger lesson here isn't just about stocks. It's about mindset, opportunity, and long-term thinking. Stay informed. Watch partnerships, technological breakthroughs, commercialization progress, and policy shifts, not just stock prices. If you found these insights helpful, please like this video and share it with your friends. Disclaimer: this video is for informational and educational purposes only. It is not financial advice. Always do your own research before investing. Thank you for watching The Wealth Wisdom. If you enjoy smart breakdowns like this, subscribe for more finance and tech insights. Hit the like button, share this video, subscribe, and turn on notifications so you don't miss our next deep dive. I'll see you in the next one. Thank you for watching.